Take Care members who enroll in the HDHP option can take advantage of health saving accounts. To explain more, Alan Faharan joins us from ASC Trust.
Hello, everyone. My name is Alan Faharan, and from all of us at ASC Trust, thank you for joining us. Your employer offers a number of benefits to help you in life, one of which is the health savings account. For those of you enrolled in a high-deductible health insurance plan, you often pay a lower premium in return for having a higher amount you'll need to pay out of your own pocket for medical expenses before your insurance kicks in. In return for this, you may also be eligible to contribute to a health savings account, or HSA. Just to make things clear, just because you're enrolled in a high-deductible health plan doesn't mean you're automatically enrolled in a health savings account, as they are two separate things. But an HSA has a number of major benefits. The first is you do not need to pay and wait for reimbursement. Your health savings account allows for use of a debit card to pull funds directly from the account as payment and healthcare-related merchants that accept. You're also given the flexibility to enroll at any time as long as you meet the eligibility requirements, and you can change your election at any time as well. And you don't need to plan for using up your funds in the account within the year, because your entire balance rolls over until you decide to use it. Even if you're no longer eligible to contribute, say you're no longer under a high deductible plan, you can continue to use the funds saved in the account for future qualified expenses. And depending on your coverage, you may also qualify for a premium pass-through with added funds contributed to your HSA. All you need to get started is to complete an enrollment form. There's no need to estimate your total health expenses for the year, so make a contribution that works best for you and have comfort in knowing it'll all carry over for use in the future. And every dollar you contribute, which is a big reason to save in an HSA, is made on a pre-tax basis. Now, when it comes to income-based taxes, many of us pay a total of somewhere between 20 and 30% of our income. So for someone who's making $50,000 a year, that could be roughly $10,000 or more in taxes. It's not surprising that many would take any tax break they can get these days, but an HSA will allow you to avoid paying tax on a portion of your income. Let's take a look at how this can save you money. In our example, we're starting with a gross salary of $4,000 per month. Because we aren't utilizing a health savings account, that full $4,000 is taxable. If we pay income-based taxes at a hypothetical 20%, that's $800 that goes towards taxes each month. On top of that, we would then have, for this example, $400 in qualifying expenses, such as towards prescriptions, lab fees, hospital visits, and so on. And that leaves you with $2,800 in spendable income. Now let's take the same example, but with the health savings account. From our gross pay, we'll get to subtract out your HSA savings before taxes are applied. Instead of being taxed on your entire $4,000 gross pay, it'll be based on $3,600, which means the amount withheld for taxes is at a lower $720 or $960 in tax savings each year. Over time, this savings can really add up, and the more qualified expenses you account for, the greater the savings. Because of the tax savings associated with each contribution you make, you might be inclined to contribute as much as you possibly can. Ensure your contribution is within these limits before you enroll. Once you have your medical procedure and are ready to use your HSA, we recommend you keep any receipts for your records. But we don't need it for you to use your debit card and pay for the procedure. If for some reason the debit card is not accepted, you can request to withdraw from your account, no supporting documents required. And of course, any qualified withdrawals you make from your HSA are made tax-free, including withdrawals of any interest or earnings made from your savings. And there are lots of medical reasons that qualify for tax-free withdrawals from an HSA, including expenses for your spouse or dependents. But if you decide to withdraw for a non-qualified reason, the amount you take out will be considered taxable, and an added tax penalty will apply if you withdraw before age 65. So what does it take to qualify? In addition to being covered under a high deductible health plan, you must also have no other primary health insurance, such as TRICARE or VA coverage, nor can you contribute to a health flexible spending account. You also cannot be enrolled in Medicare or Medicaid, nor can you be claimed as a dependent on someone else's tax return. If you are eligible for an HSA, your premium pass-through credits will be received in a health reimbursement arrangement instead, or HRA. This account does not earn interest and is not portable if you terminate employment or switch plans. We hope this presentation has given you valuable information. There's not too many ways to save on taxes these days, so please use this benefit to its fullest advantage. Please do not hesitate to contact our offices by phone, email, or live chat with us for further assistance. From all of us at ASC Trust, we appreciate your time and look forward to helping you save on taxes one paycheck at a time.